In the dynamic world of cryptocurrency, two notable players have emerged: Bitcoin and Pi Network. Bitcoin, the trailblazer of digital currencies, has solidified its status since its inception in 2009. In contrast, Pi Network, launched in 2019, aims to democratize cryptocurrency mining through mobile technology. This analysis will explore their distinctive characteristics, operational mechanics, communities, and potential futures, highlighting what sets them apart in the evolving crypto landscape. 1. Origins and philosophical underpinnings. Bitcoin was born from a desire for decentralization and financial sovereignty. Created by the enigmatic Satoshi Nakamoto, it introduced a system where transactions could occur without intermediaries. The Bitcoin blockchain operates on a transparent ledger, ensuring security through cryptography. Its capped supply of 21 million coins instills a sense of scarcity and value, positioning Bitcoin as digital gold. Over the years, it has evolved through community-driven development, adapting to technological advances and market demands. Pi Network takes a radically different approach, envisioning a world where cryptocurrency is accessible to everyone, regardless of their technical knowledge. Launched by a group of Stanford graduates, Pi focuses on inclusivity. By allowing users to mine Pi coins via a user-friendly mobile app, it breaks down the barriers typically associated with cryptocurrency mining. This grassroots approach is aimed at creating a community of users who can collectively shape the future of Pi, contrasting sharply with Bitcoin's more established, albeit complex, ecosystem. 2. Mining mechanisms. A tale of two technologies. Bitcoin mining employs a proof-of-work (POW) system, requiring miners to solve complex mathematical puzzles to validate transactions. This process is energy-intensive and has drawn criticism for its environmental impact. The hardware requirements for mining Bitcoin have led to significant centralization, where only those with substantial resources can effectively participate. The mining process not only secures the network but also ensures the limited supply of Bitcoin is adhered to, reinforcing its value proposition. Pi Network. Conversely, Pi Network uses a novel consensus mechanism called the Stellar Consensus Protocol, SCP, allowing users to mine coins simply by tapping a button in their app once every 24 hours. This approach eliminates the need for expensive hardware and extensive energy consumption, making it accessible to a broader audience. While this method encourages mass participation, it also raises concerns about potential inflation and the sustainability of its economic model. The challenge lies in transitioning from this simple mining mechanism to a robust economic framework that retains user interest and value. 3. Community dynamics. The heart of cryptocurrency Bitcoin. The Bitcoin community is a diverse and passionate group of advocates, investors, and developers. It has cultivated a culture of innovation and resilience, driving the cryptocurrency's evolution over the years. With growing acceptance from businesses and institutions, Bitcoin has gained recognition as a legitimate asset class. This community thrives on discussions about technology, regulation, and the future of finance, making it a vibrant hub for enthusiasts and skeptics alike. Pi Network. In contrast, Pi Network's community is largely built around its mobile application. The platform encourages users to invite friends and grow their networks, fostering a sense of camaraderie among participants. This social aspect distinguishes Pi from Bitcoin, as users are motivated by both personal connections and the prospect of collective success. However, this community is still in the early stages, and skepticism remains about the project's long-term viability. For Pi to thrive, it must not only retain its user base but also transform them into active participants in its economic ecosystem. 4. Utility and real-world applications. Bitcoin's utility is well established. It serves as a store of value, a medium of exchange, and an emerging asset class for investors. Its decentralized nature allows for borderless transactions, appealing to those seeking financial independence. With increasing adoption by major corporations and institutional investors, Bitcoin is carving out a significant place in the global economy, further solidifying its role as a hedge against inflation and economic instability. Pi Network. The potential utility of Pi Network remains largely theoretical at this stage. While the vision includes creating an ecosystem where users can exchange goods and services for Pi coins, tangible applications are still under development. The challenge lies in proving the value of Pi in real-world scenarios. Until the project can establish meaningful use cases, its worth will remain uncertain, and user enthusiasm may wane. 5. Future Outlook. A fork in the road. Bitcoin. The future of Bitcoin appears bright, bolstered by ongoing advancements in technology and increasing institutional interest. Innovations like the Lightning Network are enhancing scalability and transaction speeds, while regulatory frameworks are beginning to take shape. As Bitcoin continues to mature, it stands poised to cement its place as a cornerstone of the digital economy. Pi Network. The trajectory of Pi Network is less predictable. While its community-driven approach and mobile accessibility are commendable, it faces the critical task of proving its economic model and utility. Success will depend on how effectively it transitions from a mining phase to a functional cryptocurrency that users can trust and engage with. The coming years will be pivotal in determining whether Pi can transform from a grassroots movement into a viable player in the cryptocurrency arena. In the comparison of Pi Network and Bitcoin, we observe two fundamentally different visions of cryptocurrency. Bitcoin represents a mature, decentralized asset built on principles of scarcity and security, while Pi Network embodies a vision of inclusivity and accessibility. Each has its unique strengths and challenges, and their futures will unfold in intriguing ways as the cryptocurrency landscape continues to evolve. Whether you're an established investor or a curious newcomer, understanding these differences is key to navigating the future of digital finance.